Major U.S. stock market indexes are still near the all-time high figures, with the S&P 500 and Nasdaq 100 moving lower last week. In today's report, we intend to focus on the implications of the U.S. elections and the upcoming financial releases stemming from the U.S. The report is to be concluded with a technical analysis of S&P 500's daily chart. As of today, we are a few days away from the U.S. presidential elections, which will see the Vice President Harris take on former President Trump in a race that remains too close to call. In particular, it appears that Trump is leading in some polls for crucial swing states that could push him over the 270 Electoral College threshold in order to clinch the U.S. presidency. However, despite the slight edge given towards Trump, the two candidates appear to be neck and neck on numerous fronts, and with the polls well within the margin of error, a clear-cut winner has yet to emerge, with 6 days left to go until the U.S. presidential elections. Nonetheless, the heightened possibility of a Republican president in the White House could potentially provide support for U.S. stock markets, whereas a Democrat as a president could weigh on U.S. equities. Yet we would like to mention our concerns that with the race being this close, a greater degree of importance is being given as to which political party will be able to win a majority in both the House and the Senate, or if they will take each control of one legislative branch of the U.S. government. Moreover, as we stated last week, should the elections be decided by a narrow margin, we may see Trump or Harris contesting the results, which could prolong the entire process and thus weigh on U.S. equities, as political uncertainty may lead to safe haven outflows from the U.S. equities markets. In the coming days, we expect the release of some high-impact financial data from the U.S. that could create increased volatility in the U.S. equities markets. Starting with the release of the USPC rates for September on Thursday, the rates are expected to slow down, showing an easing of inflationary pressures in the U.S. economy, and if so, could add more pressure on the Fed to proceed with its rate-cutting path, maybe even with a faster pace. Thus, such a release could further ease the tight financial conditions surrounding the U.S. economy and thus in turn may aid U.S. equities. Yet the most crucial financial release is expected to occur on Friday with the release of the U.S. October employment report. The non-farm payroll figure is expected to drop to 115,000 if compared to September's 254,000, the unemployment rate to remain unchanged at 4.1%, and the average earnings report also to remain unchanged at 4% year-on-year. Overall, in the event that the predictions made by economists are materialized, it could provide support for the U.S. equities markets, as it could add more pressure on the Fed to proceed with a faster easing of its monetary policy. The U.S. 500 appears to be moving in an upwards fashion, yet some signs appear to be emerging that the bulls may be losing some steam. Nonetheless, we opt for a bullish outlook for the index, and supporting our case is the upwards moving trend line, which was incepted on the 8th of August. However, the RSI indicator below our chart currently registers a figure below 60, which may imply that the bulls may be relinquishing some control over the index's direction. Nevertheless, for our bullish outlook to continue, we would require a clear break above the 5,886 resistance line, with the next possible target for the bulls being the 6,150 resistance level. On the flip side, for a sideways bias, we would require the index to remain confined between the 5,675 support level and the 5,886 resistance line. Lastly, for a bearish outlook, we would require a clear break below the 5,675 support level, with the next possible target for the bears being the 5,400 support line. Those were the top financial stories for this hour. From all of us here at IronFX, we wish you a solid trading.